Dirty dealings, corporate battles, consumer woes. This is Evening 5. Bursa Malaysia announced it has appointed Datuk Fad'l Mohammed as its new CEO effective March 1st with the retirement of Datuk Muhammad Umar Swift, who has served as CEO of the exchange since February 2019. This confirmed a report by The Edge that Fad'l was tipped to take over the CEO post as Muhammad Umar, who had turned 60, was considering leaving the company. Fad'l, 57, has over 30 years of experience in the fields of legal, capital markets and IB. Currently Managing Director of Group Wholesale Banking at RHB Bank, he was previously the CEO of Maybank IB. Chairman Tan Sri Abdul Wahid Omar welcomed Fad'l on behalf of the board and that his understanding of capital markets and investment banking sets him in solid stead. Abdul Wahid also extended Bursa's gratitude to Muhammad Umar for his leadership and many contributions, including setting the vision and roadmap for Bursa to be a multi-asset exchange and keeping the markets open during COVID-19. Meanwhile, Bursa saw its fourth quarter net profit grow by 15.7% year-on-year to 68.9 million due to improved performance in its securities and derivatives markets. Revenue for the quarter rose 18.7% year-on-year to 185.9 million from 156.7 million ringgit. The exchange operator declared a dividend of 26 cent, which includes a final dividend of 18 cent per share and a special dividend of 8 cent per share. For FY 2024 as a whole, Bursa reported a 23% jump in net profit to 310.1 million on the back of a higher 784.3 million in revenue. Muhammad Umar said that the ongoing global and local developments continue to drive investment flows, resulting in higher market activity and increased demand for its services. Bursa is also expecting to see up to 60 initial public offerings this year, compared with 55 IPOs in 2024, which would be the highest number since 2005, where 79 companies went public. Prolintas managers, the trustee manager of Prolintas Infra Business Trust on Monday clarified that two individuals charged with corruption linked to its sponsor, Project Lintasan Kota Holdings, are not related to the operations of the business trust. In a statement, Prolintas managers said the individuals are affiliated with Turnpike Synergy, which is in charge of the construction of the Sungai Besi Ulu Kelang Elevated Expressway, or SUKE, which is unrelated to our operations. The two individuals are Prolintas COO Rostam Shahrif Tami and Project Manager Zairul Nizam Rohani. Rostam was charged earlier on Monday with soliciting and accepting 70,000 in bribes to award work packages for SUKE. He pleaded not guilty. Zairul Nizam claimed trial on January 23rd for allegedly accepting 50,000 in bribes in exchange for assisting a company to secure a highway construction project. Prolintas IBT's portfolio comprises 4 highways, namely the Ampang KL Elevated Highway, the Guthrie Corridor Expressway, Lebuh Kemuning Shah Alam and the Kajang Dispersal Link Expressway. Prolintas had carved out those 4 assets when the business trust went for listing, leaving it with SUKE and the Damansara Shah Alam Elevated Expressway. In a separate statement, Prolintas said the two had been placed on a leave of absence since July last year. It also reiterated its zero-tolerance policy with regard to breaches of integrity and governance, adding that it has been cooperating with the ongoing investigation. Selling pressure on YTL Corp and its subsidiary YTL Power International persisted, pulling the two stocks to 2-month lows. Since its close of 4 ringgit 5 cent on January 23rd, which is when it announced a bonus issue, YTL Power shed more than 16%. YTL Corp, meanwhile, lost more than 15%. At the closing bell, YTL Corp's shares fell as much as 8.96% to settle at 1 ringgit 93. YTL Power's counter ended the day 10.8% down at 3 ringgit 22 cent, giving it a market capitalization of 26.63 billion ringgit. Both were among the most actively traded, with 60.2 million YTL Corp shares changing hands, followed by YTL Power with 59.28 million shares transacted. The sell-down started after the two companies' announcement on a proposed bonus issue of warrants to raise multi-billion ringgit in fresh capital over 3 years. Notably, both YTL Corp and YTL Power had strong rallies last year. Some quarters view that some institutions institutional investors are taking profits amid the proposed bonus of warrants. The large volume of warrant conversions would create share overhang in the coming 3 years, which is likely to cap both share prices. Furthermore, the warrants would be non-tradable, meaning the derivatives do not carry any value, according to analysts, and this means that investors can't sell them on the open market for profit. Bina Puri Holdings, its subsidiary Bina Puri Properties and its director Tan Sri T. Hock Seng has been slapped with a 28.1 million lawsuit by Wisma Maju Jaya for not abiding with a joint venture agreement to develop a project in Johor Bahru called Puri Residence. In its statement of claim cited by The Edge, Wisma Maju Jaya claimed that Bina Puri Prop had approached the plaintiff in 2015 to participate in the JV to develop Puri Residence. Wisma Maju Jaya alleges that it had agreed to contribute and invest 10 million for the Puri residence with the agreement that Bina Puri Prop shall manage and develop the project's construction by appointing contractors and furnishing monthly reports of the project. The JVA was signed by T and Datuk Matthew T. Kai Woon, directors of Bina Puri Prop. The company claimed that by December 31st, 2018, Bina Puri Prop was supposed to make the first part of the repayment of the return of investment but did not do so. In return, T, in his defence and counterclaim filed on December 6, 2024, alleged that the 10 million consideration sum to the alleged JVA is illegal and constitutes illegal money lending transactions disguised as the alleged JVA. In a boss filing, Bina Puri said that it does not expect any significant and operational impact from the suit and that its board is of the opinion that it has a fair and reasonable chance of success. The deadline for AirAsia-X's proposed 6.8 billion acquisition of Capital A's short-haul aviation business, AirAsia and AirAsia Aviation Group, has been extended by 2 months. According to a statement, the mutually agreed extension moves the completion deadline to March 24th from the original date of January 25th in order to allow both companies to finalize the deal. AAX CEO Benjamin Ismail said the extension is a pragmatic step to ensure all aspects of the exercise are thoroughly and meticulously addressed, including securing final approvals and consents from relevant authorities, financiers and lessors, most of which he noted have already been substantially completed. AAX said that during this period it will also finalize the definitive terms with identified investors for the proposed private placement aimed at raising gross proceeds of 1 billion ringgit. All due diligence processes for both entities had been successfully finalized, it adds. This corporate exercise is intended to help Capital A exit Practice Note 17. Shareholders of both Capital A and AAX had approved the merger in October last year.